Hello and welcome to today's class. Our topic for today is stock exchange. Class. Our objective is to know the meaning of stock exchange, the importance of stock exchange, to know the functions of stock exchange, organizational setup of stock exchange, the meaning of securities, types of securities, factors affecting the prices of securities, and let's start with the stock exchange or stock exchange market. The stock exchange market is a specialized market for the buying and selling. Now let's look at the importance of stock exchange. 1. The stock exchange serves as an avenue for employment. It provides job opportunities for brokers, jobbers, clerks, and other stock exchange workers. 2. It is an avenue for raising capital. Companies, individuals, and even the government can raise money through the stock exchange market. 3. It is a market for investment. The stock exchange creates an avenue for people to invest in any sector of the economy. 4. It leads to increase in the standard of living. Investment opportunities will lead to more income, which will affect consumption and automatically increase the standard of living of the people. 5. The stock exchange facilitates transfer of investments. An investor can decide to withdraw his investment from one company if he wishes and transfer it into another one. 6. It provides yardstick for measuring performance of companies. And lastly, now let's move to the functions of the stock exchange. 1. Sales of securities. The stock exchange market is the venue for buying and selling of old securities. Securities are shares, stocks, bonds, debentures, etc. And these represent ownership interest in an entity or a company. 2. Funds mobilization. The stock exchange market is a capital market. So capital for businesses can be raised and mobilized by companies and investors in the stock exchange market. 3. Valuation of prices of securities. The stock exchange market can fix prices for securities, and this is determined through the forces of demand and supply. 4. They provide professional advice. The stock exchange market workers provide professional advice to investors on sales and management of securities. 5. The stock exchange encourages companies to be efficient. And lastly, now let's move to the organizational setup of the stock exchange. Transactions at the stock exchange market are only conducted by members of the stock exchange only. The members of the public are not allowed or they are prevented from transacting business directly on the market. The members of the stock exchange are classified as brokers, jobbers, authorized clerk, and unauthorized clerk. Let's start with the first one, the brokers. The brokers are agents who deal with members of the public who are interested in the purchase or sales of shares and any other securities. They are the connecting link between the buyers and the sellers of securities. The brokers receive a commission called brokerage for their service. Brokers do not specialize in any particular type of shares and can therefore obtain any type of shares for their customers or their clients. Next is the jobbers. The jobbers deal on their own behalf instead of acting as agents. They specialize in a particular type of share and they transact business with brokers instead of members of the public. They buy and sell to brokers, quoting two prices. one at which they will buy and the other at which they will sell. A jobber derives his profit from the difference between the buying price and the selling price. This is known as jobber's turn. The next is authorized clerk. They are employed either by brokers or by jobbers, and automatically they become members of the stock exchange, which make them have access to the floor of the house, that is floor of the stock exchange, to do business on behalf of their employers. And lastly, we have unauthorized clerk. They are also employed by the brokers and jobbers. They are also known as the setting rooms clerk and are responsible for routine and clerical. Now, let's move on to securities. In this class, we'll be talking about securities. So now let's define it. Securities are investments. Now let's look at types of securities. The first we have is shares. Shares may be defined as a unit of ownership in a business. It is a financial instrument or a certificate showing that one owns a part or a person owns a part of a company. We have also the debentures. The debentures are long-term loans from members of the public to a public company. Holders of the debentures are not part of the owners of the company like the shareholders, but they are creditors to the company. The holders of the debentures are paid interest on the money they lend to these companies. We have next bond. A bond is a security issued by a government or its agencies or private institutions as a means of raising money. Bonds are usually due to be redeemed at some future date and they carry a fixed rate of interest. We have stock. A stock can be defined as the bundle of shares or mass of capital which can be transferred in fractional amounts. They are always paid in full. Next is gilt-edged. A gilt-edged is a security issued by the government with a fixed rate of interest. This is the safest security as government cannot fail to pay its debt. Lastly, for this class, let's take a look at factors affecting the prices of securities. 1. We have the political situation of the country. 2. Rate of interest on securities. 3. Instability in prices of shares. 4. The activities of speculators. And 5. Before we end this class, let's look at speculators at the stock exchange market. Speculators are those who buy shares at low prices when the demand for them is low and then sell them at higher prices when the demand for them is high. There are 3 types of speculators in the stock exchange market, namely 1. Bull. These are speculators who buy securities with the intention of selling them when prices are high before the payment of the security is due. He buys with an anticipation of rise in price. We have the bear. This is a speculator who sells stock in anticipation of a fall in prices of securities. He expects prices of securities to fall before the due date, and then he sells out to make good profits. And lastly, we have now let's take a quick exercise. Question 1. The specialized market for buying and selling of old securities like shares, debentures, bonds, etc. is called A. Market, B. Stock market, C. Exchange market, and D. Stock exchange market. Question 2. The commission a broker receives for the service rendered is called A. Broker's turn, B. Brokerage, C. Jobber's turn, D. Interest. Question 3. All of these members of the stock exchange have access to the stock exchange floor except A. Unauthorized clerk, B. Jobbers, C. Authorized clerk, and D. Brokers. Question 4. The stock exchange market was established in the year dash. A. 1973, B. 1960, C. 1889, and D. 2007. Question 5. All of these are importance of stock exchange market except A. It is an avenue for raising capital, B. It provides employment opportunities, C. It encourages foreign investors, D. It is a market for investment. Question number 6. Dash are the investments that are traded at the stock exchange market. A. Securities, B. Public shares, C. Speculators, D. None of the above. 7. Types of securities are all of these except A. Shares, B. Stock, C. Bonds, and D. Brokers. Question 8. The safest security to invest in is A. Stock, B. Debentures, C. Gilt edge, and D. Shares. Question number 9. The speculator who buys security with an anticipation of a rise in price is called A. Stag, B. Bear, C. Bull, and D. Jobber. And question number 10. All of these can affect the prices of securities except A. Forces of demand and supply, B. Activities of speculators, C. Location of the stock exchange market, and D. Political situation of the country. Good luck.
We've come to the end of this class. In our next class, we'll be looking at second-tier securities market. See you there. Thank you.